These are the top tips that you guys need to know so that you can crush your trading game. I've seen a lot of you asking in comments saying, how do I use the Ichimoku? What indicators do you have? So I'm going to show you today the indicators and explain how to actually look at each part of it. And then we're going to do a series on how I trade on different trades from the long and short side so that you understand everything that I say in the future videos. Okay, so the Ichimoku is a very simple thing to learn. The name is difficult. The words that we use for each of the different parts sometimes are confusing, but once you know, you know. No one knows everything the first time. So what I'm going to do is today show you the different parts of the Ichimoku so you understand when I'm talking about them on future videos or in past videos, what the hell is Coach saying so that it makes it a lot easier for you to understand. And the cool thing about the Ichimoku is it works the same way when you're bullish as when you're bearish, just in reverse. So as long as you know these 5 things about the Ichimoku, you will already understand more than most people about this trading strategy. The first thing we're going to do is I'm going to show you a bullish scenario. So we have this cloud. You've probably seen it many times. It turns red sometimes. For some people, they use different colors like green. I use different colors because that's just how I see it. You can always adapt and change the indicators, the colors of your candles, everything on TradingView. But let's just look at where do you find the indicators. So you click up here on indicators and you look at for this one called the Ali Ichimoku cloud. Now the reason why I use that one and not the normal Ichimoku cloud is because it doubles the settings. So normal Ichimoku clouds follow the stock market, which opens and closes. What you need to understand is with crypto, because we don't have an open and close, it's 24/7, 365 days a year. And because it's open for such a long time, double the settings in crypto. Now, some people just use the regular Ichimoku, but the best traders that I know and myself use the double settings, right? And you can find those very simply by going into the indicator and it will tell you 20, 60, 120, 30, right? So now you know that is the settings for this Ichimoku cloud. Normal settings, I'll show you on this one, are 9, 26, 52, 26. So basically it's just taking an order of the time because Ichimoku has a future and a past involved in it. So let me go through each part of it first. So there's 4 different things that you need to know in the Ichimoku. And the number one thing is the cloud. Now the cloud is not the cloud in the sky, but the cloud can tell us when we're going to go higher or when we're going to go lower. When we're above the cloud, we're bullish. So as you guys can see in this example, we went above the cloud. And as you can see below that, we were bearish because we were below the cloud. So anytime we're above the cloud, we're bullish. Anytime we're below the cloud, we're bearish. And that's only one part of if we're bullish or bearish. There's actually several parts that work together to tell us that. Going back to the bullish scenario before, to make it simple, we have 4 parts. The cloud, the red level is called the Kijinsen. It is a slow EMA, meaning it takes in a longer perspective of where the price was in the last 30 days, right? We have a fast EMA, which is our Tenkin, which tells us if we're fast and we're going up and our slow EMA is below it, that's where we want to be in a bullish scenario. And the last thing that we look at, which actually lags 30 days. So 30 days ago, when you're looking at this candlestick where it closed, it will show you where it closed 30 days in the past. And that also gives us an indication if we're bullish or bearish, because if in the past we're still above the candles, we're bullish. And if in the past we're below the candles, then we're bearish, right? So it gives us a really easy indication. So, okay, we're above the cloud, we're bullish. Our Chiku span, this one right here, which is the lagging span, is obviously bullish because it's above the candle. So we have 2 bull signs, right? And then what do we look for is that TK cross. So where does the green level cross above the red? And here's a cool thing in Ali Ichimoku, which I turn off because it's kind of distracting, but you can easily turn this on, and it's this one, which will show you when the bullish TK crosses and the bearish TK crosses happen, which is why it's a great indicator. You don't have to think, well, is it happening? Because sometimes it's hard to see. It will show you this happened. There was a cross above the fast EMA, cross below the slow EMA. Our Tenkin crosses below our Kijin, and that tells us the momentum is going to the downside, right? So that's a bearish sign. So ultimately, what you have to look for is, are we above the cloud? That's a bullish sign. Did we have a bullish TK cross? So if we have one and we're above right now, that's also a bullish sign. And then where's our Chiku span? Is it above the candlesticks? That's also a bullish sign. And when those 3 things coincide, then you know, okay, we're looking for one thing. We're looking for bullish trading opportunity. So I've talked about the past the Kijin bounce on one of my last videos, where the price comes back to it and then it bounces. Why does that happen? What does the Kijin do, right? It's a great question. So what the Kijin does is it tells us when buyers and sellers are equal. If we get way too high above the Kijin, like over here, the price will pull back down to the equilibrium level. And if we're bullish, it will bounce and start to go higher. And as you've seen, that happened here, 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 all the way up. It kept using it as a level. Obviously, you have a massive dildo right here. So that was also another one. So then what do we look for, right? So I look for a TK cross in the cloud on the other side of the cloud. This is bearish, right? So when we would retest the bottom of the cloud, this would be an area what I'd be going short. But we're going to explain that more in other videos. That's not really important right now. What is important is understanding what is bullish and what is bearish and why. So right here, you could see that we were very, very bullish for a very long time. But then you could start seeing things happen where we're kind of running into the cloud. And I talked about this in the bull market last cycle when I got bearish on Bitcoin, that we started running into the cloud. And when we run into the cloud, we have to worry about us going below the cloud, because macro bearishness would be where we had a bearish TK cross, we're underneath the candlesticks, and we're below the cloud. So there's very simple things that you can learn to know what you're seeing, and you do this only on the daily time frame. So do not do this on a 1 hour candlestick. Do this on the daily. It's super accurate strategy if you use the daily chart. The second you go below the 4 hour, it becomes very whipsawing, which means you get in and out of positions because it moves around too much. So daily time frame, maybe a little bit slower, but it's very accurate. And instead of being the player inside of the casino, you are the house. That's the difference between the odds. So you want the odds to be forever in your favor. Anyways, so going back into here, what do we know? We're bullish and we're bearish. So we see this bullish TK cross, right? Candlesticks, it was above. Now we break into the cloud. I'll explain this trade to you, but basically when we break into the cloud and all the factors are bullish, then we would long into the top of the cloud, generally called an edge to edge. So these are things that you can know and learn. And once you understand the rules, you can apply those rules and you can start making money by using those rules. So you had a bullish TK cross here, but now our candlesticks were there and we're trying to enter along. Probably not the best opportunity. So I'll explain much more in depth how that works. But remember, all you need to know is a few things. When the cloud is bullish and twists over here, and we have a bearish signal right here from the TK cross, we have a bearish Kumo twist, which you'll see because this is 30 days in the futures. If you look at the cloud on a live chart right now, and I'll give you an example of what I'm looking at for stacks right here, so you can understand where I would be doing, what I would be looking for. So right now we have a bullish snare. We're above the cloud. The Chiku spin was bullish, but we're starting to see signs that potentially we're gonna have a bearish TK cross, right? So we'd have this kind of running into the candles. Maybe it's gonna go below if it starts to drop. The future still looks bright, but it could easily have a TK cross here, and we'd have all these bearish scenarios. And if we broke into it on the other side of the cloud, we might retest this level way down at 73 cents. So if we had all those factors, you wouldn't be looking to long or buy the dip there. You'd be looking to wait and do nothing. So these things help you understand. So if I had all the scenario where we should be longing and going long, and the Chiku span is my last factor, my deciding factor is always the Chiku span. If it's in the candles or below the candles and I want a long, I don't. I do nothing. If it's above the candles and we have a bearish TK cross, I also won't do it. So you're looking for all the check marks on the list so that you can go into a trade, and that's how I make my decisions. So when you hear someone say they're bullish and they don't have an actual chart to back it up, it's their opinion. When you have a trading strategy and the chart is bullish, from the trading strategy perspective, then you're either bullish or bearish. Stop listening to people who have no idea how to do TA to tell you we're bullish or bearish when they have no idea what that actually looks like on the macro. Why I made so many big calls and made them early, because I could see things happening. Like right here, I see stacks potentially running into the cloud and breaking down. You know, I see a potential head and shoulders, left shoulder, head, right shoulder formed. This could also be a head and shoulders that would bring us back down to that level. I'm looking at that going, this could potentially be a short. Now, if it doesn't happen and we start moving back up and we have a TK cross and this is above the candles, I'm not going to touch it. So it gives me like a rule base of when I should enter, when I shouldn't. So I'm going to give you guys in more depth how this all works. But as long as you can remember a few simple things. Number one, are we above or below the cloud? That's a very simple thing to know. You're above the cloud, you're bullish. You're below the cloud, you're bearish, right? That's the first step. If the Chiku span is above the candles, our lagging span, then we're bullish. If it's below the candles, like over here, then we're bearish, right? That's just two of them. Then the third one is the TK cross. Is that bullish or bearish? And the fourth thing that we can look for, which doesn't always happen on double settings, this is why I don't mention it as much, is the Kumo twist, where the Kumo goes from red, which is kind of bearish, to green, or my color, which is a darker blue, because that just works for me with how I set up my chart. I can now see where the market is going and what to prepare for a little bit earlier. That's all you need to know. It's very simple trading strategy, and people like to make it 3.5 hour courses on just what I told you right now. In general, as long as you know the rules, you start understanding what to look for. If you start understanding what to look for when I tell you guys, hey, like this is what I'm seeing, you have more of an action plan and won't just sit there and go, okay, I don't really understand and I'm not gonna follow anything or never do anything myself because I'm confused. What I want you to do is learn how to do it yourself. So I don't need to tell you anything. I just tell you what I'm seeing, and if you see it too and you start seeing the strategy working, then you'll be like, okay, like if I use risk management and I don't risk 100% of my assets in one trade, and I know that sometimes we're gonna lose and that's okay too, and I risk 1% per trade, then that is the rules that you go for. And when these strategies set up and all the check marks are there, you know to enter the trade or to exit the trade or to long or to short. It actually is that simple. I'm teaching you guys strategies that will keep you moving on the upward angle over the long term, and that you don't take crazy risks, so you don't blow up your accounts, and that you always end up on the right side of the market. Make sure you guys save this video, bookmark this video, hit the bell on the video, whatever you need to do so that you can come back to it, because we're gonna do more market reviews every single week. It will be a great reminder for you if you don't really understand it, and that's okay if you don't. We're gonna be working on a course over the next few months, and we're gonna release that to you guys absolutely for free. So it won't just be this like 1 or 2 videos here and there. It will actually give you all the tools for your toolbox so that you can be the one making your own decisions. You don't have to listen to me or any of the other influencers. I want to empower you to do it yourself. If you guys have any questions about the video today or anything that you didn't understand, leave it in the comments below, and I'll see you guys in the next video.